SoFi has their third quarter earnings coming up in just a few trading days, Tuesday, October 28th, before the market opens. I'll, of course, be covering it, but in this video, I shared some of my predictions. And after cranking the numbers, I can honestly say that my predictions might be one of the most bullish on the street. I honestly don't feel like people are giving this business the credit it deserves. And I'll explain what I mean when I dive into the numbers. So without further ado, let's jump right in. Okay, so this is my spreadsheet here highlighting the numbers, and we'll start off with members and then we'll work our way down. I've tried to optimize the screen size the best that I possibly could, so bear with me if you have trouble reading some of these numbers. I have total members here at 12.7 million with 955,000 new members added. That equates to about 8% quarter over quarter growth with 35% year over year growth. Now, why do I have those numbers? Well, we've seen record website traffic data. We've seen management be super confident in terms of how they communicate with retail shareholders and how they communicate on X. We've seen Noto personally calling people out. I mean, he even did so yesterday. SoFi actively poaching and referring people on social media after Hood has an outage or has some type of issues. They're much more aggressive on social media. They release new products. They release level one options. They released international money transfers. They have crypto that's coming out in Q4. And some of these things are not going to be reflective of in the quarter, but they are going to contribute to the sentiment change around adding new members and the business going more aggressive. They're going more on the offensive. We also saw aggressive sensor tower data. Tanner was the first one to break that news that could suggest that we could see our first million member quarter for SoFi. I'm not going that far, but I am saying that it's going to be an acceleration on previous quarters because of management going more offensive. And don't forget, we also have partial football season, which is a lot of brand awareness with regards to SoFi Stadium. They did a Josh Allen partnership at the beginning of September, and we have the preseason and all of September with football season. Q4 is going to be the big sports quarter. We have TGL in Q4, we have NBA in Q4, and we also have the NFL in Q4 for SoFi. So that's really the quarter that they're going to have over a million members. And I have that with a much higher degree of confidence in this quarter. But for this quarter, I have 955 million members. And really, that's something that's relatively within trend line. It's baking in some acceleration, but it's nothing crazy. I might not be the highest in terms of total member predictions. Now, in terms of products, I have here the products to members ratio, and I can see that ratio, how it's evolved over time. How I derive products is I look at the individual product drivers. So I look at personal loans, I look at student loans, I look at home loans, and I also look at the financial services products. As you can see, all the cells in red are my own predictions. And then that brings me to the total product number. So in terms of the total product number, I have 18.58 million total products. That's 1.44 million new products quarter over quarter, which would equate to 8.41% quarter over quarter growth or 36% year over year growth in products. Now, again, it's somewhat within trend line. It assumes a slight acceleration quarter over quarter and year over year. And it also maintains that steady growth rate in the products to members ratio. So as you can see in the previous quarters, we saw that plateauing and subsequently re-accelerating 1.458, 1.4594, and I have 1.463 here for the next quarter in terms of the products to members ratio. Now, how I got to that number is I have 1.79 million personal loan products, 615,000 student loan products, up from 596, 49,500 home loan products, up from 42,677. Now, one thing we saw with regards to loans, we saw that traffic from DocuSign. When we were looking at the website traffic data, we saw the source data, and one of them said DocuSign. And one of the speculations around that was to sign the documents, essentially to sign new members on, they would go through DocuSign. And so that was one of the interesting pieces there. It also makes sense for them to have more products because of the loan platform business origination. So some of that acceleration would be reflected here from a product perspective. Remember, the loan platform business reflects in revenue in financial services, but it reflects in products in the lending segment. So that's something to also keep in mind. Now, moving on to financial services products, I have 16.1 million financial services products. So you see, SoFi Money products here has been adding around 400 to 500,000 products every single quarter. I have them at 6.37 million money products for the next quarter. In terms of SoFi Invest, I have 3.1 million SoFi Invest products, up from 2.85 million. I have 398,000 credit card products, up from 344. I have 145,000 referred loans, up from 122. This is all within the trend line. You add about 20,000 referred loans per month. So I'm not assuming anything crazy on some of these line items. It's just extrapolating from the current trend lines. I have 5.98 million relay products, up from 5.5 million. And last quarter, they were up 500,000. And the quarter before that, 400,000, so on and so forth. So you see an acceleration here in relays growth. So this number could even be higher, over 6 million relay products, but I put 5.980. And I also put 136,000 at work products, up from 127. So for some of these, I extrapolated an existing trend line, but for others, I also added a little premium based on the news that we've seen, or initiatives that they've done from a sales and marketing perspective, as an example. And just to check my work, I went back up here and I saw the products to members ratio was relatively in line, baking in that acceleration. So I knew that, okay, this is somewhat realistic because it makes sense in the grand scheme of the frame. It's not completely out in left field where it just doesn't math on the other side of it, right? So let's move on now to tech platform. Now, I have 166 million tech platform accounts here. Tech platform has been one of the most underwhelming segments. Normally, I would add about 3 million accounts and call it a day. But I did see news around Southwest Airlines, around United Airlines, and a couple of other big deals that were hinting that they had started with Galileo. And initially, I wanted to add about 10 million Galileo accounts, but I know that in the past, I've been overly bullish on Galileo. And I know that the real acceleration is going to start in 2026 for Galileo. So I didn't want to make that same mistake. So I settled for 166 million new tech platform accounts. This is more of a finger in the air type of analysis here. There's not a lot of deep thought that went into this particular number, but it also is kind of an isolated number. It doesn't affect too much. Let's move on now to the segment financials. So in terms of the financials, we're going to start off with the lending financials, and then we're going to move on down. So in terms of the lending financials here, I have 482 million projection for lending revenue total for Q3, equates to 8.68% quarter over quarter. Now, one thing to note is that the comparable periods become a little bit more difficult, because if we look over here to Q2 and Q1 of 2024, the growth rates are very modest. But when we jump over to Q3, you can see a massive acceleration, up from 3% quarter over quarter to 16.3% quarter over quarter. So when we're looking here, 8% is actually a pretty big jump, because that comparable period is more difficult to achieve. It also equates to about a 21.6% year over year growth rate, which is relatively in line with what we've seen from SoFi in the past. And so I think 482, it's an aggressive number, that's for sure. It's not the most aggressive number, I would say, in my forecasts, but it's something that I think is within the realm of possibility. Let's put it that way. If we move on down to the financial services segment here, you can see that financial services, I have the revenue at 428 million. Loan platform business fee-based revenue is going to be reflective here as non-interest income, and we've seen a big acceleration in non-interest income. So here we see some pretty incredible growth rates. We saw 105% year over year growth rate last quarter, 101% the quarter before that. This is only 79.6%. And I know I say only 76.9%, but in the grand scheme of things, it is a little bit more tame. It is, however, 18% quarter over quarter growth. So if they had some big loan platform business deals, I could totally see this being a realistic number. But this might be one of the more bullish numbers. I don't know. I haven't seen the forecast that the guys have, but I would imagine that across the SoFi retail investment community, I would venture to guess that this is one of the more aggressive numbers out there. Last quarter, I said the contribution profit was going to be over 50%, and it did in fact come in at 52%. And this quarter, of course, as a result of that loan platform business revenue, we can expect a continued acceleration in the contribution margin over 52%. My guess would be a relatively mild acceleration, so 52, 53% in contribution margin, but we're going to see what that ends up coming in as. And this is one of the most beautiful, profitable segments you can ever imagine because it's growing like triple digits essentially, and it has over 50% contribution margin, and everything about it is absolutely staggering. Financial services is absolutely the number one growth driver for SoFi right now, and it's probably the most exciting segment because of the loan platform business and the potential to accelerate further from there. In terms of the tech platform financials, I have it as the most modest grower. I have 115 million here for revenue. Management really said that this would accelerate in 2026, so I don't have something really big baked in. We saw it jump from 103 to 109, and it's single digit percentages, if that. This quarter, my forecast is about 4.7% quarter over quarter growth. Nothing to really run home about, but at the same time, I wouldn't be surprised if the tech platform even comes in lower than this. I think 115, though, is realistic for me to have, just given where the trend line is with the tech revenue growth in general. In terms of the corporate revenue, I just have a finger in the air estimate here, $45 million loss. If you look at all the previous quarters, $45 million is somewhat in line with what we've seen recently from SoFi. And this is really, really difficult to project out in a more granular way. So $45 million is the best guess that I could have based on what we've seen in the past. We did see 60.9 million in the last quarter, but I think that's an outlier. I think we're going to come in relatively closer to 40 million negative for corporate revenue. And that brings the total revenue to 980 million for SoFi, which absolutely sounds staggering. And this is why I said in the beginning of my video that, some of these numbers sound unrealistic because analyst expectations are 887 million. So what I'm saying here is I'm forecasting over $90 million in a beat for SoFi, which is a 10% beat on analyst estimates. They've done that before, but more realistically, the beats that they have come in at high single digits. So a number at 950 million revenue is somewhat realistic, but it really depends on which one of these drivers you want to pare down to lead to that 950 number. My number stands at 980 million for total revenue. Now, in terms of the adjusted EBITDA here, I have it as 289 million. I assume the 29.5% EBITDA margin. Now, of course, that EBITDA margin is somewhat in line with the acceleration that we've been seeing over the past 6 quarters, where the EBITDA margin jumped from 22 to 23 to 26.7 to 26.97 to 27.25 to 29.1, and now I have it as 29.5. And if we say it's 29.5, then that leads us to this number, 289 million in adjusted EBITDA and 122 million in net income. Now, I'm also assuming an acceleration here in the net income margin. We've seen this over the past couple of quarters here. Of course, this isn't an outlier quarter because of how they do their accounting, but really their net income margin is in the high single digits if we look at the last 4 quarters. And I have it at 12.5%, which brings me to 11 cents of EPS. Now, if we look at analyst estimates, they're expecting EPS of 8 cents. So this would be a really big beat on analyst estimates. They would beat by 3 cents. However, the earnings whisper is at 10 cents EPS. So there is something to be said about even beating out on the earnings whisper number. And let's just take a look at the analyst estimates very quickly. So here we have the forecast. And as you can see, that SoFi always beats out on the analyst estimates. And this is what I was talking about. The revenue surprise is generally high single digits. Currently, if we have 980 million forecasted, that would be at about a 10% beat on the analyst forecast of 887. And if we have an 11 cent EPS, that would be about a 37% beat on the EPS, which is not outside the realm of possibility. If you look at some of their previous beats, I mean, they've doubled EPS, they've tripled EPS, they've increased EPS by 50% plus multiple quarters in a row. So 11 cents EPS here relative to the 8.3 cents that they have as forecasted for the bottom line is not crazy. Now, these are very bullish estimates. I won't deny that, but they're not outside the realm of possibility. I think that SoFi can pull it off because they have in previous quarters. And of course, as you can see here, SoFi has a rich history of beating and raising guidance. So we'll see if they continue to raise guidance for the remainder of the year. Of course, I will be covering SoFi's earnings live on this channel. So make sure that you tune in at 7 a.m. bright and early on Tuesday, October 28th. For right now, thank you so much for listening and following the channel. And let me know what you think of these forecasts, whether you think they're way outlandish and too bullish, or whether you think I'm not being bullish enough. And I really want to compare with the rest of the SoFi community what their numbers are. So make sure you join us on Friday for the FinTech Friday show, where we're going to be running through all of our predictions ahead of SoFi's Q3 earnings report. Thank you so much for listening, and I will see you in the next one.